Hey guys, welcome back to the Mr. Global channel. Today I'm going to cover the second quarter survey put out by the Dallas Fed. So every quarter, the Dallas Fed sends a survey to oil companies across the country and oilfield service company and asks them a bunch of questions. How's your business? What are your plans? All this kind of stuff. I really enjoy reading these surveys because it gives oil companies an opportunity to put comments in there. And sometimes the comments are really funny. They just are. Plus, it's really good information because you get to hear directly from over, I think, 130, 135 oil and gas companies in the United States. Some are companies that produce oil and gas, and some are oil field service companies, right? So let's cover that before we get started. Please like, subscribe, share. Really appreciate all my new followers. So let's go. Let's look at the first question here I'm going to cover. How has the number of wells your firm expects to drill in 2025 changed since the start of the year? And if we take a look here, 3% said it has increased significantly, 16% increased slightly, 34% said no change, 21% decreased slightly, and 26% say decreased significantly. So it looks like 47% of oil companies say their plans to drill have decreased either slightly or significantly. 29% say increase, but only 3 of those significantly. Now, you may ask the question, why would some oil companies plan to actually increase drilling during a low price environment? Well, a low price environment means that an oil company can get better deals from service companies so they can actually drill wells cheaper. And typically what these companies will do is they'll drill wells a lot cheaper because prices are down, and then they'll let them sit there and they'll complete them later when prices recover. So that's why sometimes you will see an increase in activity during a low price period. This question here, the top of it is cut off, but they're asking about tariffs, the tariffs on steel and how it is impacting their plans to drill over the second half of 2025. And this is pretty much what I would have expected, 5% significantly, or 5% significantly fewer, 27 slightly fewer, 46 no impact, 22 too soon to know. Steel prices can impact drilling activity, but it's one of so many costs that go into it. If a 4 or 5% change in cost can disrupt your whole plan, then it might not have been a good plan to begin with. This question here, if oil stays at $60 for the next 12 months, what do you expect to happen to your firm's oil production from June 25 to June 26? $60 oil. Zero say increase significantly, 6 increase slightly, 24 remain close to the same, 9 decrease significantly, and 61 decrease slightly. So 70% some sort of decrease, only 6% any sort of increase, and that is only slightly. But the next question is $50 oil, and these numbers change drastically. And here are the numbers at $50 oil. 46% say decrease significantly, 42 decrease slightly. So that is 88% saying it's going to decrease. And this is with oil at $50. 9 remain close to the same, 2 slight increase. And this is the part of the survey when you get into what's called special questions and comments. And I saw a lot of these. So remember, this survey happened in June. So there's a lot of comments about what was happening with Iran in June because, like, we were at war, that's all over with. So I can't really take much from those comments. But there's a couple here at the top that are good. Despite higher steel prices, domestic mill output hasn't increased, which is creating inflationary pressures. U.S. steel producers should scale up production of steel and other steel products. Why would they? Why would they scale up production and drive down prices? This is called capitalism. This second one here is pretty funny. It's hard to imagine how much worse policies and DC rhetoric could have been for U.S. exploration and production companies. We were promised by the administration a better environment for producers, but were delivered a world that has benefited OPEC to the detriment of our domestic industry. And keep in mind, these are oil company executives speaking here. That is who is saying this stuff. So, wow. This is another set of data that I like to look at. It's basically business activity report. How healthy is it? When you have all these negatives here, that's not good. That is not good. So level of business activity, negative 8.1. Yeah. Employment, negative 6.6. That is not good at all. Company outlook, negative 6.4. The only thing that's a positive is uncertainty at 47. Holy cow. That first chart was for business activity for oil and gas companies that produce oil and gas. This one is for oilfield service companies. Business activity, negative 15.6. Wow. Employment, negative 17.7. Employment hours, negative 13.3. Operating margin, negative 33.4. All of these negatives. This is all really bad. And this is coming directly from oil and gas companies and service providers. And here we have some more comments. Tariffs and uncertainty have harmed domestic energy industry. Drill baby drill will not happen with this level of volatility. Companies will continue to lay down rigs and frack spreads. Secondly, there is constant noise coming from this administration saying $50 oil is the target. Everyone should understand $50 is not sustainable for oil. It needs to be at least in the mid-60s. Too much uncertainty in the market. There was a comment here that I thought was funny. Yes, even among all of this terrible news in this Dallas Fed survey, you have one politician. Thank God the previous administration is gone, and so are their anti-energy policies. That is a perfect example of where politics exceeds business. Someone is putting their politics before their business. Oil companies made roughly, 4 times more money under the last administration than this one? Thank God they're gone. Anyway, those are the highlights from the second quarter Dallas Fed Oil and Gas Survey. Hope you guys enjoyed that. Thought it would be something a little different to do. Let me know what you think in the comment section. Please like and subscribe. Thanks, everybody. See you guys in a bit.